Hey everybody, welcome to Mortgage Today for Thursday, June 13th, 2024, and oh, what a day it was. Wow, we had two green mornings in a row. Hope I didn't jinx it. But UMBS were up 13 basis points on the open, both PPI and jobless claims are clearly in the rate-friendly camp. Bonds are rallying accordingly, with 10-year yields down 7 basis points at 4.24 this morning. We got month-over-month core PPI, which came in flat at a flat 0 versus a 0.3 estimate as 0.5 previously. Year-over-year core PPI came in at 2.3 on a 2.4 estimate as 2.4 previously. About 60% of the decline was due to falling gas prices, excluding food and energy. The index was flat and rose 2.3% on a year-over-year basis. Both numbers were below expectations. Then we got jobless claims, which came in at 242,000 on a 225 forecast, 229 previously. So people have hope that the jobs market is easing up. It's a mortgage world, so we got to root for bad news. The median home price in the U.S. hit a record last week. According to Redfin, the median sales price hit $394,000, which is up 4.4% on a year-over-year basis. Asking prices appear to be leveling off. However, the median mortgage payment fell to $2,829 due to falling mortgage rates. And we also had a 30-year auction this afternoon, which came in at 4.403 versus a 4.418 expectations. The bid to cover was 2.49 versus a 2.41x average. This is a strong result considering bonds were already near their best levels heading into the auction. The bond market reacted favorably to this morning's economic data, which consisted of sharply lower producer prices at the core level and sharply higher jobless claims. But based on the next few hours, traders might say that the initial move was an overreaction. It wasn't until the 30-year bond auction that Treasury yields were able to break to new lows on the day. MBS, however, never made that quantum leap for reasons we ponder in today's recap video. One of the reasons has to do with the chance that things are changing in terms of the broad rate momentum, but we can't really know if this time is different until several months of data confirm the story that's currently only 2 days old. If rates are to rally further, it requires an ongoing supply of friendly economic data. By friendly, we mean bad news. The bar gets higher as rates get lower. Risk-tolerant floaters can use recently broken floors as new ceilings, aka lock triggers. Defensive clients are focused on risk associated with inbound economic data. Both sides of the spectrum should continue to consider that it takes several months of cohesive economic data to truly confirm a shift that coincides with a more float-friendly environment. UMBS closed the day up 13 basis points at 100.77. The 10-year is now at 4.245. It was above 4.5 not that long ago. But at the 100.77, which is what we really care about, boy, look at that. It is just bouncing off of that Fibonacci line at 100.872. So both of the last 2 days, we tested it. Oh, no, nope, buddy. Yeah, it ain't happening. So it came back down. So we'll have to see if we can get some good, bad news in order to break into that new range.